All right. Good morning, good afternoon, good evening, ladies and gentlemen. I'm going to give this a second here because I think that some people are probably going to need to get back in here. Yep. Making sure people can get in here. We had a little bit of issue. No big deal. All right, good stuff. Good morning, good afternoon, good evening, ladies and gentlemen, and welcome back to the stream. I apologize for those issues. Who knows what happened? But this is not financial advice. The information on this channel is provided for education, informational purposes only, without any express or implied warranty of any kind, including warranties of accuracy, completeness, or fitness for any particular purpose. Please read this. That way you know this is not advice. This is all only for education purposes only. This is going to be a great stream. Ladies and gentlemen, I have some pretty good stuff planned. Purpose of this stream, we're going to go through the levels count. We're going to go through some back testing. We're going to talk a lot about a few different things, but I'm going to start out with how does the market move around? And I think I've got a really good illustration for you all that I wanted to share. So let me get this other one up here. Bam. So this was something that I had drawn up for the webinar group this week, and because I think it illustrates really well, like on a day-to-day basis. Now, this is just information for not only a good way to build a process for yourself. This is all based off the stuff that I've already put out, all my videos. But talking about it now, maybe I can provide a little bit more clarity for some of you and hopefully get you all on the right track if you're not already. So let's talk first about how does the market move? How does it move around? What is its goal? What is its purpose? At the beginning of any given week, at the beginning of any given day, there's going to be a peak formation, either low or high. And on this example, this is from gold today. Right here, they put in a peak formation low at the low of the day. This is the Asian range. And then the market went up and put in a peak formation high. Now, that could have been the end of it. This could be level one, big run up. This is level one consolidation. Maybe it's going to break down and go down back towards the low, 3 levels of drop, something like that. That could have absolutely happened, but it didn't. The market moves around peak formation to peak formation. Peak formation low at the low of the current day. It's run up. We've gone back into consolidation. And a lot of you are really overthinking your entries, and we're going to talk about entries today as well. So the market comes up and it goes back into consolidation. They hit the stops. They get people to start going long, triggering in breakout traders, getting people to go long, and then it stop hunts back down to the low. Now, this is exactly how the market moves at any given point in the chart. Depending on what level consolidation you're in, they're going to make a false move to get people to believe the move is going to move early. They're going to then stop hunt against those people and try to get other people into the purpose of a pullback, something I've talked about. Induce traders on the wrong side of the market. Stop out traders who are long early and shake out any of the weak longs that maybe have their stops down here. They make the market look convincing. Hey, it's going to keep going down. So we have a big run up, level one consolidation, and then we get a move up into level two. Now we're in level two consolidation, and they do the exact same thing. And one of the things that I was talking to the group about, I told them, hey, I do not think this is level three. I think they're going to make another move up because I can't tell you how many times I think, hey, I'm at the high of the day. It's time to sell. And they push up one more time because the stair step, right? This is level one. Get people to go long early. Stop hunt to the low. Rise. Level two. Go back into consolidation. Get people to go long early. Stop hunt to the low. Stop out the longs. Get people to go short. And then run it one more time. And that's exactly what happened. But overall, I'm going to go over some of the trades I took this week as well. When the levels are very, very clear and you say, hey, I'm in level 3, you start looking for those M's and W's. And one of the things I'm going to talk about today are the daily process. How do you get in at anywhere in the chart at any given time, depending on what level you're in. So I'm just going to reiterate this one last time. Peak formation low, peak formation high. They trade back down into a already pre-existing W at the low of the day. If I'm in my timing window, that could be a setup with a thesis that we're in level 1 consolidation and it's a trend trade, right? I'm going long. Now we're in level 2. So that's this right here. That's how the market moves in any given consolidation, trapping on both sides of the market and then going up to the next level. If you want to look into that more, you can just go and study Steve Morrow's content. He talks about that very frequently, about how they move from level to level. I think, I'm not going to directly quote this, but he said it's going to really irritate you because once you realize how the consolidations work, it's going to frustrate you because you've been getting trapped. One of the things I brought up to them today was the fog of war. And I understand this is not war, but it's kind of the same thing when it's not the same thing. Someone's going to clip that and post it on some place. It's going to go viral. I'm going to look like a ridiculous human being. But what I'm talking about is the psychology of it all, right? Where they're making a shroud. It makes it look like it's going to do one thing. It's going to make it look like it's going to do another thing. We've got traders trading in every single direction, super confused, and then they shift it away from the zone. So let's take a look. What is my process on a week and on a day? On throughout the week. So I need to look at the weekly first, not the weekly chart, but the overall week, identifying what kind of weekly template that I'm in. I'm going to identify my peak formations. Those are going to give me levels. What peak formation am I currently trading away from, and what level am I in while I'm trading away from that peak formation? 1, 2, or 3, and that's looking on the 1 hour chart. I'm looking at signal days. I am looking at first red, first green day. I'm looking at inside days, how many days of breakouts, which could also correlate with what level I'm in. If I'm in level 3 after 3 days of breakouts and I get an M at the high of the week, that could be really good. Opening range. I'm looking for opening range style setups. Monday, Tuesday, Wednesday. Was Tuesday an opening range breakout? Was Tuesday first red, first green day? Coming out of level 3, high of week sells, things like that. Inside day, whatever. However, did the opening range breakout succeed or did it fail? Looking at those types of templates. Now, on the day itself, very first thing I'm doing, I'm identifying my Asian range. Where are my peak formations? Right there and right there. Good stuff. Based on the weekly analysis, I am basing all of my trading setups off of what the rest of the week has done. All right, I am trading based off of a weekly template, and I just happen to be on the day looking for a daily template that is lining up well with my overall thesis for what level I'm in and what where we're at within the week and what signal days I have and whatnot. So based on the weekly analysis, 3 levels, rise or fall, question, am I getting a second leg of an M or W? And that's one thing we're going to talk about here in a second. Was the M or W already formed and now the market is, quote unquote, locking it in? One of the things that Stacey Burke's talked about when you have an M or a W and the market trades back down into that, are they working the low or are they working the high at a certain time of day? Are we trading back down into the low in 3 pushes after making a higher high to lock in the low of the day to go vertical? Those are the kinds of things that we're thinking about and looking at when we're looking for the different kinds of entry. All right, now I need to pull up a chart here, and I have, because of some technical issues, deleted. There we go. We're good. Now I'm going to pull up this gold chart, and we're going to look at this. We're closing the day as a big run up. Good stuff. So 5-minute chart. This is the exact template that we were just looking at on that other screen. If I was to come into this day, all right, big peak formation down at the low of the week. Let's start off on the 1 hour chart. We're going to run through the example together. The market has traded down from last week from peak formation and down 3 levels, once and twice and 3 times down into the low. And then we have what could have been or is a large W down low. Probably shows up a little bit better on the 15-minute chart. That's totally okay. And then we get the level 1 of rise. So this is our first big run up. That's level 1 of rise, big run up, all right? Market comes back down and trades back down into the low of that peak formation, and then puts in a new W and then continues. So now we're up into what could be level 2 of rise for this week. Coming off of peak formation high, 3 levels of drop, peak formation low, 3 levels of rise, right? Now within this week, 1 day of breakouts, 2 days of breakouts. Who knows what tomorrow's going to hold, what Monday's going to hold, whatever. But that's not what I'm trying to reiterate right now. So if I'm coming into level 1 of rise, maybe coming up into 2, when you're in level 2 consolidation for the week, there is going to be opportunities for high of day, counter trend opportunities, right? So if I'm level 2 for the day or for the week and I'm up at the high of the day, there might be counter trend opportunities that I'm willing to take. However, those are generally going to come out of level 3 for the day, right? So if I'm still level 1 or level 2 consolidation for the day, that might be, it might sound a little confusing, but I promise it's really not. Like here, this is okay. You could have maybe got a high of day sell, but you're not going to get as much reward as you're expecting. Whereas if you're in level 3 for the day, now this day's been a big runner. If you're in level 3 for the day and you're in level 2 consolidation, you might get a stop hunt from the high of the day back down to the low of the day because we're in level 2 and now we need to make that big run up soon to follow. All right. Let's back up here for a second. Someone's asking about US30. We're going to get there. So the first thing that I do is I look at the week. We've identified peak formation low at the low of the week. Got it. Now we have a big run up, day 1 of breakouts. Now we're into day 2 of breakouts. So this is probably not the best template to be trading or looking at. Over here, this would probably be okay because you're in level 3. You're up high, high of day. They put in a peak formation high. One thing that I wanted to talk to you all about, though, is stop overcomplicating the entries. People have been messaging me and asking me, like, can you explain the entries better and things like that? Here's the thing. If I'm in level 3 consolidation for the week, right, and I have a signal day, 3 days of breakouts, 3 pushes outside of the opening range or something like that, I am going to look for a template that on that 3rd day of rise, so let's just use this as an example. Let's say that this day right here was the 3rd push out of the opening range. And I'm coming into the New York session and we're at the high of the day. I am going to look for an opportunity for the 2nd leg of an M. Because I'm in level 3 after 3 days of breakouts, that would be the setup that I need to look for. So if I get a candle like this that's straight up and then I get a down close candle that follows, I'm going to draw a line at the high of this candle and allow the market to trade back up into that high. And then I would go down to a lower time frame to try and catch the 2nd leg of that M from the high of the day coming out of level 3. Okay. On the flip side of that, what if I already had an M that was developed earlier in the day? So I framed my day. We've got 3 levels of rise or whatever. Or maybe the Asian range is just put in peak formation low and peak formation high for the day. So like I would be looking at the Asian range kind of like this. And then Asia would have put in a high. And then maybe London came down and put in a low. And then we're trading back up towards the high. But I'm in level 3 for the week. That means that there was already a pre-existing peak formation. And now I'm using timing. I am looking at the chart. Hey, we're getting into 9:30 and we're trading back up into the high of the day. Maybe we're locking in the high of the day. So this is 2 very different scenarios of how the day could set up. Peak formation high, 3 levels or 3 pushes back up into the high of the day at that peak formation level to go short. Opposed to Asian range has put in a high. We put in a low, and then we come off of that low and go higher. So we would be like, okay, 1, 2, and 3. Now I need to look for 2nd leg of a W, an M, where if they put in a down close candle, I draw that line because they may have just put in a middle structure in my session so that they can trade back up into it. It trades back up into it, probably in some kind of 3 push variation down on the lower time frame. And I am trying to get in on that 2nd leg of that M, all right? Now, not to confuse anybody, but this is where I would also be using the 100 pip box. I would be looking at where that level, if they just put in a peak formation or we're at a numbered box level, one of the 100 pip box levels, I could be looking at that as my reference point for when they trade back up into it. Maybe I want to get in just above or just below that numbered box level, all right? So I tell you all of these things as a precursor to talking about this trade from the Nasdaq. So I look at the entire week. We're coming off of a peak formation high from Friday. Let's go to the 1-hour chart so I can do this a bit more accurately for you all, because that's how I would do it. I would look at the 1-hour chart. We get not necessarily a first red day over here, but we come down and then we begin the week. So at the beginning of this week, now there is a peak formation at the low of the week, and there was a peak formation from the high of last week. Market trades back up into the high of last week, into that peak formation high. And then we get a first red day. So 3 levels of rise and a first red day, lower low back down on the inside of the current week's range. So that also gives us peak formation at the low of Monday, peak formation at the high of Tuesday, which is a setup that we talked about in the Tuesday live stream based off that tips and tricks slide. So let's frame this day right here together. Let me go back. We'll take a look. We'll take a look at the 5-minute chart, just as I would have or did on that day. And we can look at the Asian range. So during the Asian range, there's a peak formation high that was made into the Asian range right here, and it's traded back down into the low and put in a peak formation low. Good stuff. Now, from this, they did 3 levels of rise. This is the original peak formation that was made in the day. They went higher. They created a consolidation. They spiked the high. They spiked the low, and then they continued to rise. So this was level 1 consolidation right here, and then they went up to level 2. Now we're in level 2 consolidation. They do the same thing. Spike the high, drive it back down into the low to spike the low, and then third level of rise. This is the 33 trade that you would hear Steve Morrow talk about. 3 levels ending in a 1, 2, 3. So 3 levels ending in a 1, 2, 3. And also this is that picture that I posted. Level 1, or push 1, excuse me. Notice the candles, how they get real strong. Those are some of the strongest bull candles I think I have ever seen in my life. They don't have wicks. It's just straight up. Number 1. And then they get real, like, kind of smaller, right? We're a little bit indecisive. And then all of a sudden, bam, they hit it again. And then it gets indecisive. And then they hit it again. 1, 2, 3. Once, twice, 3 times, ending in a 1, 2, 3. 9:30. Let's go down to the lower time frame. This is my middle structure. I draw my line. Also, you could use the 1, 2, 3. Let's go back down to the lower time frame and put up the 100 pip box real quick. Yep, that one. And that one. So with the 100 pip box, my 1, 2, 3 to the high is forming. The peak formation could be forming at that level right there. I think that's 50. Double zeros, 25, and 50. So if I get into the market, I just want to get in at or above 50 because I'm getting in on the second leg of an M. I can be a little bit more aggressive. I'm at the high of the day. I'm in the level 3. The levels were very obvious. Good stuff. Then they engulf right at 9:30 the M on the lower time frame. That allowed me to get on this candle, get in on this candle, and get in on this candle right here at the close of those candles. All right, so all of that analysis is what went into this. It seemed like a lot, but I'm just breaking it down so that it becomes hopefully a lot more simple for you all. That is a second leg MRW entry in level 3. I'm allowed to be a bit more aggressive. However, if I was going to be a bit more conservative, I would have waited for this lower low to be put in. And then the 3 push pullback. Push 1, push 2, push 3. They formed a M above double zeros, and that can allow for follow-on entries. All right. Beautiful. It's really quiet out there. How you all doing? Is this making sense? Is this fairly straightforward so far? Checking up, see where we're at. I use Friday's closing price for an entry. Very good, Jay. All right. Let's take a look at the trade that I took today on EurUsd. Same process is going to apply. Now, this one, I went a little bit further back. Why? Well, we've been going down for quite some time. This is a 1-hour chart, EurUsd. Let's get back to a blank chart. So, where's the last time that they put in a peak formation high? One might be able to argue that the last place they put in a peak formation high where they did not go any higher was back here from Friday. One might also be able to argue that maybe this was the high right here on Thursday. So we'll just use that one and be a bit conservative. So peak formation high about midweek on this week back in March, and it has made one large level of drop. This was also the first week down. This was the opening price for that week, and this was the first time that they went lower in quite some time. So this is like a first red week, if you will. So 1 week down, level 1 consolidation. Then we come down for week 2, level 2 consolidation. And then now coming into week 1 down, first week of breakouts, and second week of breakouts. But this is the third week of going down. All right, so I can objectively say, to an extent, that I'm down low. Now, same process applies. When I'm coming into today, Thursday, at the beginning of this week on Friday, there was a peak formation low, and they went up 3 levels. 1, 2, ending in a 1, 2, 3 to the high. And then they put in peak formation high at the high of this week. This is a failed breakout at the high of the week. And that tells me, hey, maybe they're going to go back down to the low. But there's also a peak formation up high, so good stuff. This is the previous week's low, and on Monday, they had not taken it out just yet. It's still down there, hanging out. So after peak formation high, they come down, and they go back into consolidation. Level 1 consolidation right here. Then we come down and maybe get a nice little level 2 consolidation for the week. And then today, they come out of consolidation in a 1, 2, 3 to the low. Now, this was earlier on in the day. Let's go down to a lower time frame and frame our day on the day today to figure out how would I built this thesis. I'm already looking for a buy low opportunity, but how do I know that this trade is going to play out? I never do. But all I can do is frame my day the best that I possibly can and see if it sets back up in one of those two fashions. Either there's already a W formed and we're trading back down into it to lock it in, or I'm trying to get it on second leg MRW the way that I showed you. So right here, peak formation low at the low of the current day. I've got the wrong thing up there. There we go. Peak formation low at the low of the day. 1, 2, 3 to the high. Beautiful. Then we put in a peak formation high at the high of the day. So I have a low and I have a high. They went lower, which means that this peak formation is no longer valid. Then we have level 1, level 2, level 3 consolidation coming outside of the peak formation at the high of the day. I'm framing my day. Do I have 3 levels of drop coming into the New York session? This is 545. This is 7. So yes, I have 3 levels of drop coming into the New York session. And before the New York session even begins, right there, that's 8 o'clock right there, I already had a W at the low of the day. Beautiful. Then we get a run up. Now this could be level 1 consolidation. They spike the high, get everybody to go long first, spike the low, cause mass chaos and confusion, put in a new W after the news, and go vertical. Level 1 consolidation right here. Let's go down to a lower time frame. See, how would I have entered on this in a safe and intelligent way? So we have 3 levels of drop and a peak formation low at the low of the current day. We believe that maybe we're in level 1 consolidation, and I just need proof. Awesome. So peak formation up high. Within that consolidation, spike the high, spike the low, pull back up. This is where the news was. Right there, 8:30. Within this little itty-bitty consolidation down here, they put in a W, and we start to get our ascension. This is how I got in right here. This was the 8:30 open. They spiked it and created that nice little W to go long. I went long on this candle right here. This was the 8:30 open time. They spiked low, then they spiked back up. They're confirming my thesis at this point. If you go back to the 5-minute chart, because I was monitoring both at the same time, that candle turned into an engulfment and then a pin hammer. Okay, so this is the candle that I got in. Engulfment of the previous structure, and then this was the pin hammer, the one that I got in on. All right, so maybe the low of the day is locked in. So now I need to draw. Now, I'm going to be completely real with you. I did not see this ascending channel until I was already in the market, so I entered here, and then I drew this channel afterwards because I saw it forming. I added into my position as it was climbing just about in this area here. And my third and final add-in was right here. Now, who can tell me why would I have taken profit right here at this level? Does anybody know why I would have taken profit at that level? Some of you that have been in the streams for a little bit, I'm hoping and praying. Please tell me that you remember. Why is that level important? Why would I have taken the trade back to that level? What was the significance? I think there's a little bit of delay on this, so I'm going to assume, and I'm going to hope that you all are typing away right now. Furious. Stabbing away at that keyboard to let me know. Oh, yes. Thank goodness. Jay, you're both correct. Fantastic, right? So why are there breakout trader stops in that area? This is an area of the chart where they broke out and they have not retested it at all. It was just a solid, clean break and 3 levels of drop and a peak formation at the low of the day. And I couldn't see it, but now looking in hindsight, you get an inverse head and shoulders at the low of the day. Beautiful. So 3 levels of drop, peak formation. They trade back down into it. They lock it in. And then the ascension back up through the high. Back up to those breakout trader stops. I had my take profit right there on the line. Smacked it, and I was out. All right, beautiful. So what was my overall thesis? I was in level 3 or an area of the chart where I believed that we have 3 levels down. I'm down low within the week. We're at the low of the current week. They triggered the low of the previous week. They came out 1, 2, 3 to the low, put in a peak formation low, trade back into it, locked it in. Good stuff. I was looking at the pound as well for the same thing. I actually said it this morning. I really didn't care for this one as much because it's still an inside week. I don't think that the levels are quite as clear on this. I do think that this is a beautiful peak formation. That is one of the best half Batmans I've ever seen. And I think that level 1 down is very clear, and I think 2 down is very clear, and I think 3 down is very clear. But I think the euro was the better pair to trade just because they had triggered the previous week's low as well. And the 3 levels of drop were just immaculate. But you could do the same process again on this one. We've got a peak formation at the high of the current week. They trade back down into the low. We trigger previous day's low. 1, 2, 3 outside of the Asian range. Oh, gosh. 1, 2, 3 outside of the Asian range. If I looked at a 5-minute chart like I'm supposed to, and then I should be on this day. Peak formations at the high of the day that have made a run down. All right, so we've got a run down, level 1, and level 2, and level 3. Let's see, what time is this? 6. So this was all before the New York session as well. So also this one was not nearly as down low. I think that's why I stopped watching it, is because the euro was trading back down into the W, whereas this had already got away from the W pretty far. What is the advantage of using 1 hour time frame against the 15? Hey, Ecal, so the 1 hour time frame, I only really use that to identify the weekly levels. I think it makes it very easy to see without or throughout an entire week. It makes it very easy to see peak formations and things like that. Where's the low? Where's the high? You can use it. Sometimes it's not as clear. You know, it's not perfect. Like I can't see the M and the W as well on the 1 hour chart. So like here, where you have it's really just a V bottom, but this is actually a little inverse head and shoulders down here. Down candle, up candle. There's the head. That's the right shoulder, and then the vertical. So this is a peak formation down low. So it can help you to identify how to better put your lines in place, because that was a peak formation at the low of the week. But do I just need to mark off? Do I want to just mark off the low like this? Not always, because if there's a W down low, I want to mark off the neckline, because that's where they're going to trade back down into to lock it in. So peak formation at the low of the week, they trade back down into it, put in a new W at the low of the current day, coming off of peak formation at the low of the week, Monday, Tuesday, Wednesday. In fact, this actually might not be a bad template to go back and frame the day with you all. All right, was this the first green day? No, not quite. But it was a failed breakout. Peak formation at the low of the current week on a Tuesday. They pulled back up on the inside of the range. Let's go frame this day. Was this a Fed day or something? Because it looks like it moved really late. Who cares? Let's go look at it. All right, so we frame the day. We already have a thesis based off of Tuesday, peak formation at the low of the week, and we'll close back up on the inside of the opening range. I'm looking for a buy low opportunity. So what do I need to do on the day? Look at the Asian range and figure out where the peaks are. As long as they're obvious, because this one is not quite as obvious. I'm going to use that one right. Yeah, that's questionable. We're going to use this. All right, so peak formation at the high of the day, and it trades down in 1 and 2 and 3. Hold on, let me redo this so you all can see. 1, break of trend line. This is one way of measuring the levels, right? If they give you a really clear trend, sometimes it'll do 1 leg in 3 pushes and then break trend, but that'll give you a good reference for how to identify the levels. So 1 leg down, break in trend, draw that line. Twice. Descending triangle. A lot of times level 2 will appear as a descending triangle, ascending triangle, or some kind of running wedge. Drops it down into level 3. Peak formation, W at the low. Trades back down into the W. So, for example, like if I was trading this on this day, and there's already a W that is formed. What if the New York session had began. Good stuff. So over here, coming into 9:30, how would I actually got into this? If I've noticed the W has already been formed, I get down on the lower time frame and see, are they working the low of the day? Are they working the low? So this is my line that I drew of the engulfment of the W, and you can see pushing and pushing and pushing. 3 pushes into the low. And then you get a little W down there that goes vertical. What time is this? Oh, after 9:30. Right there. So that'd be an ideal entry. Yeah, the Asian range is unbelievably powerful, in my opinion, Nav. If you understand the weekly templates, the daily templates are exactly the same. Once you start, yeah, exactly. Once you start seeing those patterns, you don't unsee it. You cannot, nobody's ever going to be able to take that from you. And then let's go back and review this one more time. You know what? In fact, let me pull this back up. Let's do this again. Now, I'm going to tell you this. Take this and ignore the fact that this is just one day on a 5-minute chart. All right, I want you to ignore that this is just one day on a 5-minute chart. Let's substitute. What if this was a Friday? We got a peak formation low at the low of Friday, and they ran it up and went back into an end-of-day consolidation. Now the new day starts. Monday starts. Let's draw a daily separator right here. I wish I could draw on this thing. Can I draw on this? All right, spinning wheel of death. What's going on? I just wanted to draw on the picture. Okay, good. And now it's blurry. All right. Markup. Beautiful execution on my part. Let's see here. Nice. All right, so maybe this is like end of day consolidation to end a Monday, or a Friday. You know what? We'll just use Monday. Okay, so this is like the opening range. Okay, we come into Tuesday. They spiked a high. We're in level 1 consolidation. We got a first green day, and they've made a higher high. Maybe this is like Friday's high. They've made a higher high. And then coming into Tuesday, I'm looking for a buy low opportunity. I frame my day. Maybe this is like the Asian session. We get a peak formation at the high of the day. London, they trade back down into the low. And then New York session, towards the end of the day, goes vertical. So Monday, Tuesday. Now we come up into Wednesday. This would be like push 1 outside of the opening range. Now we're up into push 2 outside of the opening range. And now we're back into consolidation. So what I'm trying to get across is the daily templates that I'm looking for are exactly the same as the weekly templates. And in the weekly templates, it's just this pattern. I'm trading from peak formation to peak formation. Level 1, level 2, level 3. Looking for M's and W's. I'm looking for... What was that? It went from curvature to straight real quick. All right, I've got a peak formation low. Level 1, level 2, level 3. This is where the setups come from. Peak formation low. Do not counter trend level 1. First green day. Do not counter trend. Big rise up. Over here in level 2, I can get a high of day opportunity to stop hunt back down into the low, but overall, I want to find 3 levels of drop so that I can get a trend trade. Breakouts day 1, breakouts day 2, breakouts day 3, 3 days of rise. On that 3rd day of rise, it could even just be 2 days of breakouts, really, but if it's 2 days of breakouts, I better at least have 3 levels of rise on the 1-hour chart. And then I get a first red day, peak formation at the high of the week, first red day, and the same process will repeat. Now I'm looking for stop hunt to the high. So on a 5-minute chart, I look at the Asian range, I identify peak formation low, and I look for 3 levels of rise. I look for that template after first red day. I get to the high of the day, they put in a peak formation. Now, once I have 3 levels up, now I'm trying to identify, how am I going to get into this? I've identified that I'm up 3 levels. Have they already put in a peak formation high at the high of the day on this day? Or am I getting in on second leg of the M? If I'm getting in second leg of the M, I'm waiting for an up close candle, followed by a down close middle structure candle. I draw my line. I wait for them on the lower time frame to trade back up into that and for it to break down using the 100 pip box and things like that. If the M is already formed earlier in the day and I have a peak formation high at the high of the day, I need them to trade back up into that level. And I'm going to look at the 100 pip box to see what level was that peak formation made at, because that's going to tell me what level I need to get in at over here. Okay, then that process repeats. Level 1 down, level 2, level 3. That could be day 1, 2, and 3 of breakouts. Or that could maybe just be 2 days of breakouts, but the 1-hour chart has put in 3 levels. New week opens up. A lot of times Friday likes to put in a sneaky little peak formation. New week opens up, or maybe Monday puts in the low. And then that is just going to repeat over and over again. Jay, that's a good question. Let's talk about that. In fact, I'm going to pull up a chart. What's so simple and easy, but when you are alone, you sit in the TV? I promise, Sebastian, I'm telling you, just keep working at it. I'm telling you, once you start to see it and you're like, oh my gosh, that's really it. Just peak formation, 3 levels of rise and fall, weekly template. I'm in this level, that level, or this level. First red, first green. Associate the setups. Depending on the setup or the signal that I'm receiving, it's either a buy low or a sell high day. And I know that means I'm looking for 3 levels of rise or fall based on the day. Template, things like that. It's as simple as you can get it. I know I'm saying a lot of words, but when you actually are doing it in action, it's really not that much to look for. Let's see here. And I'm not like attacking you or anything, by the way. I don't know if it came across that way. I hope not. But let's take a look at US Swiss, because that's a fine example of they've just been going for quite some time. And I missed this one today. I'm a silly goose. I need to go jump in the pond. So this one over here was peak formation down from like 2 weeks ago or 3 weeks ago. This is a common level 3 behavior where they keep ascending, basically an ascending triangle, right? That's common level 3 behavior. Sometimes it's not just a perfect W down low. Sometimes this is what you get in level 3. Then it breaks out. All right, now this is very clear. We're on a 1-hour chart. That's very obviously, look, consolidation. They spike the high, they spike the low, and they continue to go higher. Very nice level 1 behavior. Beautiful. And then it happens again. They spike the high, they spike the low, and then they keep going. Now, this is where things get a little finicky, a little tricky. This is 3 levels of rise, 1, 2, and 3. That's very clear, very obvious. In fact, there was even a trade over here where they spiked back down into the low. That was level 3. What did I say when we were looking at the daily or the 5-minute chart? I said, hey, that's a peak formation. That was a peak formation at the low of the day, and they went lower. That peak formation is now void, which means you might receive 3 more levels of rise or fall. Okay, so this is what we would call a peak formation reset. They drop it down after 3 levels of rise and go vertical back up through the high. So we can expect 3 more days or 3 more levels. All right. Now, this was a little tricky, but look at this. This is what I was talking about. Use that trend line. Break in trend. Level 1 consolidation. Spike the high. spike the low, rise. We're starting to come full circle now to what I was talking about in the beginning of the stream, and everyone was probably looking at me cross-eyed. I hope. Level 1, level 2, and then level 3 up into the high. Now, that level 3 means absolutely nothing unless they put in a peak formation at the high of the week, which they did. Not a first red day, but still peak formation at the high of the week. Nonetheless, we can even use the 15-minute chart to better identify where it was created. It was created just about right here. Okay, so I need to frame this day. I don't have necessarily a first red day on this day, but I'm up in level 3, and I've got a peak formation at the high of the day, high of week. I need to frame this day and look for a sell high opportunity. Now, I did not take this trade today. I said I should wait until later in this week. I don't know why I said that. I kind of feel ridiculous now. It is what it is. Asian range, they put in a high, they put in a low. All right, so we'll assume or believe, this is the low. Little peak formation down here. Market comes up once. Maybe this is 2, maybe this is 3, but it doesn't matter. They go into consolidation at the high of the day, put in a peak formation at the high. Coming into the New York session, they've already dropped it down one level. So this is level 3 up here. They've dropped it down a level. Now we're in level 1 consolidation. I cannot scream this loud enough into the mic. In fact, I think my mic has noise reduction, so it won't even matter. Do not counter... For those of you who've been watching Stacey's videos for a really long time, and also this is coming from Steve Morrow, do not counter trend level 1 consolidations. This is not advice. This is only education. But Steve says it. Stacey rants and raves about it in all his videos as well. Do not counter trend level 1 consolidation. Why? Because it's going to go vertical. They are going to trap you at the worst possible place. Within the day, do not counter trend level 1. And within the week, do not counter trend level 1. This is level 1 consolidation for the entire week because we just came off peak formation high at the high of the week. All right, so we get 3 levels of rise to the high of the day. Level 3, they drop it down. Level 1 consolidation. What time is this? Oh my gosh, the timing is perfect too. That really hurts the soul. All right. Spike the high, get everybody to go long. Spike the low, get everybody to go short. Actually, I think they did it opposite. Spike the low, get everyone to go short. Spike the high. And then there's some follow through. All right. This is level 2 on the way back down for the day. Now we're in level 3 in the day in consolidation. As it should. You trade at 7 to 11 p.m.? No. That's just the Asian range. I do not trade the Asian range. I'm trading New York. I trade from 8 a.m. to 11. I just lost my mind for a second. 11 a.m. to... Yeah, we're going to have to go somewhere. I trade from 8 a.m. to 11 a.m. Eastern Time. Holy cow, New York session. Morning session. Joseph, hello. Good to have you here. What about GU? Oh, I already went over GU. I can go back to it, though. Talking about for today. Is there an indicator for... Yes. It's a free indicator. It's not public here on TradingView. It's on my Discord channel. It's free. You just have to add it to your favorites. The script is not public because I think the gentleman that made it couldn't make it public for some reason. It's this one right here. Nope, wrong one. It's the same one, but these are all my settings. For this one, you can see I've got it up here multiple times, but I've got the EMA up there and then 00s, 25, 75. One thing I'll tell you is that make sure you're using all Owanda charts except for gold. Gold is the only one that I use Forex.com because the tick values work well with this indicator. Can you illustrate what a first red or first green day is? Like your analysis, do you make live analysis? Yeah, I do a lot of live trading on the Discord channel in the public community, and I also trade live every day with my webinar if I'm teaching one that week. Can you illustrate what a first red or first green? Yes, I can. What's the Asian session time? 8:30 to 3 a.m. for this one, and that's going to give you the best levels and things like that. If the trade presents at that time, do people trade at that time? No, I'm only trading, Paulie, I'm only trading in my window. So if I'm in New York session from 8 a.m. to 11 a.m., that's it. 009, good stuff. I'm glad you like that playlist. Anybody who doesn't know what playlist he's talking about, I've got a watch from the beginning playlist. If you just watch it from the beginning, very top video, watch it all the way through. I explain all this stuff. I think it's pretty good, but I guess I'm a little biased. London, 2 a.m. to 5 a.m. Yeah, so the 12 candle window is different from what I've got here. I don't want to confuse everyone with that. From 8:30 to 3 is just the times that Steve Morrow has talked about using for your Asian range, but the 12 candle window, 8 p.m. to 11 p.m., and then London is 2 a.m. to 5 a.m. New York is from 8 a.m. to 11 a.m. I've just started using the Asian session like this. I don't even need those other colored boxes. I could care less. This makes it so much more simple. And I've been back testing this and using this for quite some time now, and it's been beautiful. It's been great. All right, somebody asked me to illustrate what a first green day would look like. I'm not going to illustrate it. I'm going to show you. Okay, there it is right there. I was actually looking for a buy low opportunity today on the Nasdaq. Did it work out? I took a trade long, but it didn't expand. It didn't explode, and that's okay. Let's take a look at why. Why would I look for a long today? Okay, so we're coming up. Same process. Remember this picture right here. It's always the same process. Well, not with all this junk up there. Nice. It's the same process every day. I look at the weekly, and I go back down. Once I form my weekly thesis about where we're at within the week, I go down to the daily. All right, so let's go back. So coming off of a peak formation at the high of Thursday, which is the high of last week. Trend line down, break trend, level 1 down. Yep, okay, level 2 down, big wick, and we hit level 3 yesterday on Wednesday. And that is a W at the low of the week. Failed breakout, day 1 of the 3-day cycle, and also a first green day. Peak formation high, peak formation low, also first green. All right, so that's the open. We've had multiple large dumping days, multiple days of breakouts to the downside. A peak formation put in at the low of the day, and a day that is closed above the open. So think of it like a math equation. Yep, we're going to butcher this. Let's do it. Yep, here we go. There we go. A plus B equals C. All right. Why do I do it like this? Because some people are getting very confused. People say, oh, well, that day went down and then it closed above the open, and that means that it's a first green day. No. You need both of these behaviors. You need multiple large dumping days. You want to be in level 3 when you get a first green day. Remember that pattern that I've been drawing over and over again. 1, 2, 3. Then I get a first green day. That's going to give you the best opportunity. 1, 2, 3. Then I get a first green day. I look for a buy low opportunity on the following day. But I need a large dumping day or just multiple days of dumping. That is the first part of the equation. I cannot have a first green day unless I have that dump as well. And then B. What is my B day? A day that is opened, attempted to trade lower and put in a peak formation at the low of the current week and closed above opening price for the day. All of those things have been met. So I'm looking for a buy low opportunity on this day right here. So that means I need to frame my day for that day. Let's take a look. Boy, what a consolidation. That is wackadoodle. That's all right. Let's pull this across. In fact, we can pull this even further across. Where was this? What time is this? When did I get in? I got in after 9:30. Okay. So right here, there was a peak formation high at the high of the day. That is an M. And they have came down once, twice, and 3 times. That means that they have put in a peak formation at the low of the day. Now, I need to pull up a numbered box because that's going to be important as well. They put in that peak formation at 75. So that peak formation was made at 75. Now, I did not get in at 75. There was somebody else that sent me a message that they had got in at 75, and I almost jumped out of my chair because it was a good thing. I was like, good on you. I did not quite have this. I've told you all in previous live streams, I am not good at V-tops and V-bottoms. It hurts my soul. All right, so what happened over here? What did allow me to get into this long trade? That was the 930 open right there. Huge down move. We traded back into, remember I said, if there's already a W formed and they trade back down into it in 3 pushes, they could be locking it in. 930 opens up. So this is the beginning of a new 15-minute bar. 1, 2, 3. Immediately goes right back up. Up, down, up. That engulfed the 930 time. I got in on this candle right here. Small size. And then I added in. And then it continued to go a little bit further, and I wound up getting out. It was starting to go sideways up here, and I just closed everything. Seems to me US30 is by far the biggest mover on average. I would agree. But that also means that I have to use a little bit smaller size on US30 because it can be a little scary. All right. So, whatever. I can't see anything that's going to happen to the right. Obviously. I wish I could because that would make this so much easier. But what I can see is, hey, that's a peak formation at the low of the day. I cannot not say that. That is a beautiful W. And they put it in at that level right there. I can't fake that either. I can't unsee that. I can't, whatever. That's pretty objective. And they traded back down at the beginning of 930, which is where I want to be getting in. 1, 2, 3 to the low, then they engulfed 930. Engulfing times is one of the ways that I'm allowed to get into the market. And there it is right there. Currently waiting for first red day on gold with a little teacup or coffee cup. Well, let's go take a look at that. Because I also have been looking at gold. Now, this is all, I do not trade like this. All right, this is all just for fun right now. Please don't yell at me. Or you could. Feel free to yell. It's fine. This is a pretty big time frame chart. What is happening? I don't want all of this. I don't even know what this is. Whatever. Hey, so this is a weekly chart. Obviously, we don't trade on weekly charts. That's insane. But you can see the exact same behaviors, and I think that's pretty cool. So I'd like to share that with you. Big rundown. Peak formation at the low on this weekly chart back from like November of 2015. Level 1 consolidation. Big run up that breaks trend. Level 2 consolidation. Are we in level 3 consolidation? Are we going to level 3 right now? I don't know. That kind of seems like what it's happening though. Again, that is all way outside the bounds of what I usually do for trading. But I popped up the little weekly chart the other day and I saw this and was like, well, that looks like level 1 consolidation 2, and now we're up into 3. So what you're saying about waiting for a first red day on gold, I kind of agree. I wouldn't mind seeing that. And then also, for the week, the fact that we've got 1, 2, and now maybe we're up into 3. And the rollover for tomorrow for Friday could be good. All right, ladies and gentlemen, I have been running my mouth now for about an hour. And you all have been fantastic, by the way. This has been a great stream. Went from technical difficulties to you all just being, participating a lot. So I appreciate that. Does anybody have any questions about anything? Anything that I've gone over? Hopefully you all have really thought this was useful or whatever, but I mean, this is it. This is like the keys of the kingdom. You understand? If you just understand how to identify the levels, I mean, you're already like 85% of the way there. And then you just inject the weekly templates and the signal days and stuff in there. All my tips and tricks. because they all correlate with this pattern. If you understand this pattern, all that other stuff will come easy. For Nasdaq, well, I couldn't tell you. See, that's the thing. All I can tell you is I have a peak formation at the low of this current week, and I have 3 levels of drop. That's all I know. Jay. Right, so with that information, I don't know how Friday is going to trade. This was an inside day. That's good. I don't know how Friday is going to trade, but from this, I would just say I would come into Monday and be, hey, that's a peak formation at the low of the week. I'm in level 3 or whatever, right? And I would just do that same exact process again. This one right here. And that's part of the reason I really love this strategy, because I'm not trying to be smarter than anybody. That's something that Stacey said before too, and I really liked hearing him say that because that made me feel a lot better. I'm not trying to be smarter than anybody. I've got a high school diploma and 8 years of military service. I'm not exactly a mathematician, all right? I'm not a physicist out here. But I understand the patterns, and I understand the peak formations and the cycles and how the psychology of how the market moves around, and that's good enough for me. I think, yeah, next week is coming off a 3-day weekend. I'm going to really, I don't know about Monday if the market's closed for Monday. Someone showed me a thing today that London markets are closed on Monday. I'm not sure about American. But I'm probably just going to do my best to wait until Tuesday before trying to take trades, or ideally Wednesday. All right, ladies and gentlemen, you all have been absolutely fantastic. Thank you so much for being here. I really appreciate the participation. I hope you all have learned something today, at least one thing. If you have, before you go, do me a huge favor, hit the like button. Enjoy the rest of your weekend. And I'm going to see you all in the next one. Next week, I'm going to be able to do morning live streams, and I'm also thinking about doing maybe some live trading here on YouTube. I don't know. We'll see. You all have a great rest of your day. Bye-bye.